Hello and welcome back to another video. For those of you who don't know me, my name's Jared, and today we're going to be discussing some penny stocks that I believe are worth investing in. They may not be penny stocks for long, so stay tuned and make sure you watch the whole video. If you can smash the like button for me, that would be great. Subscribe, go back and watch some of these other videos. I've gone much more in depth with some of these stocks and gave some more price analysis on where I think the stocks are actually heading. Let's get right into it. So, we're going to be talking about four different penny stocks that I think are of great value. I think they're going to go much higher and they have a lot of real world use. And then I'm also going to give a bonus of two different stocks that are actually still on the cheap, but they're not considered penny stocks. For those of you who don't know, a penny stock is valued at $5 or less. They are typically very high risk, also high reward, and high margin of losing. Um, these are the stocks that people are going to look at and, oh man, I should have bought 5,000 of them when they were back at $1, right? None of these are actually at $1. They they go down pretty good, and they were at $1 in the near past there. But let's get right into it. First up is going to be Plug Power, and we're going to go straight into the chart. Right now, we just broke over one of the major resistances we've been playing around at 392. That's going to be a huge breakout if we actually stay above it. Now, Plug Power is a hated stock across the board. There was a lot of um, ramp and um, a lot of people invested in Plug Power expect huge expectations. We should go with that. So when you scroll out on the chart, you can see Plug Power was up at $75 at one point. So a lot of people got burnt on Plug Power. Now, with all that being said, I think Plug Power has an insane amount of room to grow. And I have another tab pulled up here, and I'm going to show that as to why. But regardless, following the chart, we have upwards momentum. We have great upside potential. And we should hopefully, if we clear these previous all time or previous highs being at 457, then we have tons of room to grow to the upside. I could see Plug Power being a $5 to $6 stock in the near future, and that's kind of what I'm striving to um, go for. That's the whole investment strategy I have behind Plug Power. Once we get above $5, I'm going to sell my call options. I'm going to hang on to the shares that I actively own of Plug Power. And we're going to move right into some of what they do. They are a hydrogen power company. They do where is it? I always screw up with this word, electrolyzers for clean hydrogen products. They pretty much turnkey. They got shipping, um, storage. They come in and they'll build it out for you. And the thing that I think a lot of people are missing on them is they are actually finalizing some of these contracts and being the supplier and or transporter of hydrogen for major companies. We're going to go right into the current monetary impact of hydrogen fuel, and it's only valued at 155 billion. Now, when you look it up by 2050, it's anticipated to be over 750 billion. It's growing pretty slow all in all, which is why I think a lot of people have kind of been wishy-washy on the hydrogen, and a lot of people got burned by Plug Power and the hydrogen market in general. The thing that people got to realize though is over 570 billion in direct hydrogen projects have been announced by 2030. That's awesome news. And only 7% have actually been cleared final investment decisions and they await market stronger demand incentives, which is absolutely fine. I think Plug Power has actually been one of the major winners of that space for that 7%. And when you're talking about only 7%'s been actually contracted, there's huge growth potential for Plug Power. They do have, right here in the news a week ago today, they just got the final investment decision with Plug Power electrolyzer supply. And that's for 30 megawatts of a green hydrogen project, which, you know, when you're talking about only 7% of the 530 billion, and then you have growth of 750 billion within the next 30 years, you just have such a tremendous amount of growth with a stock like this. And it is only a penny stock, meaning it's under $5 currently. When we go back to the chart, you can see that we actually were under $1 pretty significantly back a year ago, just actually exactly a year ago. You have these huge spikes that happen with these kind of companies, and you come right on back down. So make sure that if you are investing in a company like Plug Power, when you have these massive spikes up, you start setting some stop losses, you end up selling some of your profit. Make sure you're staying ahead of the market cycle when it comes to the energy related sector. It moves quick, and you have these massive booms and you have massive busts as well. So make sure you're sticking true to your trade path, trading path in your own system. Meaning, if you want to make 100% and sell off 25%, make sure you do that at 100%. Because if you don't, you're going to be regretting it later. Now, there's always going to be the what if plays, so you always got to pay attention to those. But if we're making money, we're happy, right? I think Plug Power's got a lot of future ahead of it. The CEO was talking about seeing a net positive company, profitable company by the end of 2027. They have a lot of backlog, and they've been nailing these contracts like crazy. It's almost every couple of weeks they land another finalized contract. So it is happening. It is ramping. We got to take that into consideration. Right now, Plug Power is a buy anything under $5. I'm going to continue buying. You can see the day range. It was at 375. It's back at 418. The 52-week range is crazy. It was at 77 cents. So you're already talking about a 6-7x from its 52-week low, and it's sitting with a 52-week high on October 6th of 2025. If we break over that high, there's no real resistances that are going to keep us down under a $6-7 stock. Moving forward, we're going to go to Big Bear AI Holdings. Big Bear AI, it was a loved stock for a while. It's still growing. It's still expanding, and a lot of people kind of shifted gears once it hit, I believe, 939. I don't. It broke over 10 for a day, and a lot of people shifted gears and sold out of Big Bear AI. You don't even see it talked about right now. And that's exactly why we're looking at it. When these stocks aren't talked about, they have potential of being talked about. And then you have these massive rallies. Big Bear AI, it offers supply chain management, national security. It's in AI and cybersecurity solutions. Anything that's going to be AI powered, they're going to be doing. And they definitely announced something huge that I think has slipped across a lot of people's pages and not really been talked about enough. Is they're deploying an AI powered supply chain security platform in Panama's Dry Canal. That's going to be the spark of potentially something huge. If they start landing these major security, supply chain security platforms all across the board, you're talking about all the ports can implement them. That's a massive, massive amount of opportunity. Big Bear AI is sitting right around a resistance at 418. We are above it today. We just broke above it pretty significantly. You can see we've been kind of messing around with this resistance for a while. It would take us to get above roughly 612 to really see a massive leg up in this rally, like you can see back here in October 2025. And it has the potential. It's right lining up. The biggest issue I'm seeing right now is they didn't discuss numbers when it comes to that Panama dry canal or dry shipping. They didn't talk numbers. What is actually going to be coming in for Big Bear AI? They have tons of room to grow. I'm super excited about it. They're also in airports. You guys have probably seen the machines that you just walk through now with the advanced technology, and you don't even have to take your shoes off. They're all a part of that one, too. There's so much room to grow. That's going to be awesome to see. I'm excited for Big Bear AI. Same thing as Plug Power. If it ends up breaking that $6 to $7, I'm going to sell most, if not all, of my call options and hold on to my shares for the long haul. And that's going to move us right into Rich Tech Robotics. Rich Tech Robotics had a huge interruption in their pricing. And when I say that, it happened right back here where they launched up. Everybody thought they were going to go to all-time highs. But that's because they said that they were partnering with, I believe, Microsoft, further than just a standard partner agreement. And Microsoft called them out on it, said, nope, it was a standard partnership agreement, which is absolutely fine. I'm glad that they are partnering in general. Granted, it would be great if it was a stronger partnership agreement. However, that was not the case. So they sell robotic solutions for automation across the board. They constantly are launching events, robots. So right here you can see a showcase where they had AI-powered Atom Robot making a noodle making demo in Chicago. They've been doing that for a while now. They launch, I believe it was a coffee robot in Las Vegas, and right here a robot in Times Square, coffee robot in Times Square. They do have a robot in Vegas as well, and they did become available in the Microsoft Marketplace. Robotics have been talked about. They are the wave of the future. They're employees that don't need sick time. They don't show up late. They're a one-time purchase. Everybody's been all about that. However, I don't think they've really started actively investing yet into the companies that are going to be providing that. I know people are heavily invested into Tesla, things, bigger companies like that. But I believe Rich Tech Robotics is going to be a wave of the future. And worst case, they'll end up getting bought out by one of those companies because they're going to start landing contracts here pretty frequently, I believe. Now, we're about to hit another resistance. Do I think we're going to bust up to all-time highs over this resistance? No, I do not. I don't think there's enough of a backing in the momentum positively to have us launch above it. But I do see us getting back up to this 345 resistance, and we're probably going to hover around that for a little bit before moving higher. That's absolutely fine. That makes it a buying opportunity for everybody. Granted, it was a better buying opportunity back when it was under $2, but you live, you learn, we move on, we continue buying into companies that have good valuations. I believe Rich Tech is going to continue growing. I think they got a lot of good ahead of them, and they began beating again. They almost netted positive back here. They don't have the greatest growth, but with that being said, when you're a robotics company, you actually got to start providing the robots. You got to start actually capitalizing on these contracts and providing the goods and services that you are contracted to. We're going to go into a more goods based business here with Honest, the Honest Company. They provide, let's scroll down here, a personal care company. It provides personal care products to babies and adults, diapers, beauty products. They got a lot of good ahead of them, and they've been posting really good earnings reports. You can see right now my total gain, I'm up 22% with Honest. I do see them being over a penny stock, so over a $5 company in the near future. You can see they were back in July 28th of 2025. They were actually above a penny stock company, and they're about to meet this resistance level again. They got their butts kicked back on this 380 about a week ago, 2 weeks ago, and they dropped back down to this lower resistance. It was a great opportunity to pick some more up before another move to the upside. Now, they have potential to stay above this $6 to $7 range with their earnings reported right now. They did only meet on earnings, and they had way lower growth, but a lot of people didn't actually look into what they were doing. They actually offloaded a lot of their products that weren't making a ton of money. So obviously that affects their earnings per share because they don't have as much revenue coming in. But that sets them up better in the future. That's what's exciting about Honest. With that being said, their growth potential is not good. You got a lot of insiders intending to sell, but you can see where they actually broke down those companies that weren't as profitable. So you can see right now, you can see the difference between the cost of goods sold and the sales turnover and the gross profit. So even though they had less sales, they actually maintained their gross profit and increased it slightly over their Q4 earnings. Now, they're barely lower on their gross profit from a year ago, but you can see the sales difference. So they're earning more on the goods that they are selling, which is exactly what their intention was if you go back and listen to it in their earnings statement. They talk about doing exactly that. So to me, Honest is still a strong buy. Anything under $5, I believe this year it's going to go over $5 on its own without much more to the news. You got the peace talks going on right now. That's going to open it back up. There's going to be rallies all over the place if that actually happens. Now we're going to move into the companies that I wanted to discuss today. They are not actually penny stocks, but they are still below $10. Actually, Fubo went over $10 today. So kind of made me a liar, but only by 5 cents right now. So we're gonna keep it in there because I do want to talk about Fubo, and they're the strongest they've ever been, which is awesome to see. But we're gonna get into realloys right now, and there's market shifts constantly in the stock market, and that's very important to pay attention to. Everybody's been full bore on semiconductors and memory, which is awesome. I've been a part of that. It's been great with AMD, SMCI. If you want to learn more about those companies, you can go back and watch some previous videos. I'm sure I'm going to be talking about them in the future again. You can stay tuned for those. Subscribe if you haven't already. And the markets shift. So when these companies take off, everybody starts selling and they start buying into other companies, right? That's going to be the market shift that we're accounting for. And one of the market shifts, I believe, is going to be energy and rare earths. Rare earths is going to be so massive in the upcoming years because the Department of Defense, the reliance on China, the Strait being closed down right now has definitely changed the way the world is going to see rare earths and energy because it directly affected the entire world, not just the United States. And that's exactly what Realloy is trying to do. Right now, they're staying under resistance at 1155. They're more closer to this bar support at 932, which is absolutely fine. I see them being a $20 company by the end of the year again. They continue getting advancements and contracts through the Department of Defense or Department of War, and they're constantly being brought up in the news, which is just going to be causing a lot of headwind to the upside. Now, I am down overall in realloys, but I am still purchasing. That's the big kicker, is just because it goes down doesn't mean that it's not a good opportunity. Now, they are more of a technology based company, but they are supplying magnets. Magnets are going to be needed heavily in all drones, in Air Force, pretty much anything and everything you can think of in the Department of Defense. They're going to need these magnets, and they're one of the only companies that does it. As you can see, they were founded in 2024, so they're on the newer side. They are doing fantastic things, and winning those government contracts is going to be massive for them. Once again, I do see them being closer to $20 by the end of the year. I will be pulling some profits off the table if they do, in fact, double from here. I think it'd be silly not to. I see them running for many years into the future once they start establishing themselves as a supplier of these magnets and the rare earths. Now, Fubo. Fubo has been a loser for me pretty significantly. They did a stock split not too long ago. That's why you can see that a change in the numbers. They were a reverse stock split, I should say. So they were definitely a penny stock by that point. Right now, they'd be $2.50 roughly if they didn't do that stock split or reverse stock split. Now, Fubo is a live TV streaming company. They own Hulu and live TV for entertainment, Fubo for sports, and they are growing pretty consistently. Now, they have been beating pretty well. They are not necessarily net positive, so they don't actually have a PE, they don't have growth to show on here, but they have been improving on their earnings, and their net income has been improving. So hopefully we can see them get back to positive and continue that rally forward. I know they are owned now by Disney, I believe, and they got a lot of difficulties ahead of them. A lot of competition for Fubo. I think since they are the strongest that they've ever been, they got a lot of growth ahead of them once people start realizing that it's actually going to become a profitable company. With that being said, my actual insight or stock prediction for them by the end of the year is only going to be around this upper resistance, $14 to $15. It's not going to be anything crazy. It's going to be a slower growth for this year, but I think next year they have much more potential when they keep up the numbers and the earnings that they've been coming out with. With that being said, if you enjoyed the video, smash the like button, leave a comment, subscribe for future videos. I appreciate you all sticking with me throughout the video, and we're in the market for the long run. Hopefully everybody's making money out there, and I'll see you in the